shares the blame. We watch the scenes we live unfold.
All right, bet. Yo. If everybody can hear me loud and clear, let me get y'all to drop like a 1 in the chat for me, please. If y'all can hear me loud and clear, let me get y'all to drop a 1 in the chat for me, please. And we can go ahead and get it cracking. Make sure that I can hear y'all loud and clear. Let me get y'all to drop a 1 in the chat. Anybody that is on the call. And we will go ahead and get started. All right, cool. So y'all can hear me. All right, bet. So, definitely shout out to my boy Kyle. Appreciate you for being on the call. Shout out to Michelle. But you know, I know it's only a couple people on the call, not really tripping. We're definitely going to build up our audience over time. So kind of a little bit of a, you know, just a little bit of a background. You know, on my YouTube channel, I was going pretty hard. Ended up stopping. And actually, let me put on a little bit of light. It's kind of dark. Hold on. Hold up. All right, bet. So pretty much what I wanted to be able to talk about is going to be that I'm going to get back to what I was doing before. You know, I'm going to make sure that I'm consistent this time around. And today is basically going to be, you know, the first day, you know, the start of everything that I plan on being able to do moving forward. Shout out to my boy Kyle for helping me get started on YouTube Live. Shout out to my boy Abel. Shout out to my boy Skaggs for kind of, you know, showing a different way to be able to do it. You know, we are used to doing like Zoom calls and things like that and then uploading to YouTube. But to be honest, doing it straight on YouTube as far as streaming it on YouTube Live and then pretty much just uploading it from there, in my personal opinion, is going to be a lot better. And it's going to be easier, smoother, so on and so forth. So those are going to be things that we're definitely going to be taking advantage of. So shout out to YouTube. And I hope that you guys look forward to being able to get on these calls, you know, in the future, because we're definitely going to be running these weekly moving forward. So the calls I used to do for like my live trading calls, I am going to replace those by taking advantage of oh man, my camera turned off. That's one thing I kind of don't understand. There's instances to where like the webcam would just turn off and I have no idea why. So I guess what I'll do is I'll just take that off for now. I don't know why the webcam isn't working, so we'll just do without it. Like I said, this is my first time live streaming. I have been having a couple issues, but nothing too major, so I don't want to just dwell on something like that whenever it's not really that big of a deal. So once again, if you are on the call, let me get you a drop of 2 in the chat if you can still hear me. Make sure microphone still works. I know the camera is not on, but okay, cool. You said I'm good. All right, bet. So we're about to go ahead and get started. All right. So what I'm basically going to be focusing on today is going to be pretty much just going back over a couple of the things that I saw in the market this past week. So one main thing that I want to be able to focus on is going to be basically 2 setups that I was looking at from the past week. So today's call is not necessarily going to be anything too long. I really just wanted to get my feet wet, get back on. I am going to start back dropping consistent content on YouTube moving forward. So I just want to be able to make sure that you guys are, you know, just privy to what we're going to be doing moving forward. So let's go ahead and get it. Now, there are basically going to be, as I said, 2 setups that we're going to be going over. Now, one of the setups that we're going to be going over is actually going to be Euro GBP. So let me go ahead and get that on the screen. Euro GBP. All right, cool. So Euro GBP was actually one of the setups. It was either, yeah, it was Euro GBP. Euro GBP is actually one of the setups that I was looking at from the other day. And what I want to be able to do is I want to be able to actually show you guys the difference of, losing a setup, winning a setup, and pretty much making your money back. So one thing that I always used to have issues with is, being able to bounce back from a loss, right? You know that the loss is going to happen. No matter how long of a winning streak you have, a loss eventually is going to come. And at that point, what you want to be able to focus on is how do you bounce back from the loss, right? It's not if you lose, it's when you're going to lose. And whenever you do lose, you want to be able to know how you're actually going to bounce back from that. So the first thing I want to be able to talk about is actually going to be breaking down. It's going to be two setups that actually took this week, right? One of which was Euro GBP. The other one was actually going to be NZD USD. So one thing I want to be able to make sure everybody is able to do is actually have a Telegram chat, okay? And in this Telegram chat, I want you guys to be able to make sure that basically all you would need to do is, I guess I'll just go ahead and drop this in the chat for y'all. So I have a Telegram chat that I drop all my trade alerts to if you guys want to be able to keep up with that, or just know, whenever I go live on here and so on and so forth. That'll be what you guys take advantage of. So let me go ahead and show you guys the last two trade ideas that were sent out. So Euro GBP. So we're going to go ahead and break down Euro GBP, and I'm going to talk to you guys and explain why it is that I actually took Euro GBP. Okay, this is what the setup looked like. And the thing that you want to be able to decipher, in my personal opinion, whenever I'm looking at setups is if you do take a loss, whenever you go back and look at the loss, because what you don't want to do is you don't want to take a loss and then not go back and see why or what you could have possibly done differently. So what I like to be able to do is I want to always go back, look at my losses, and then I'm going to ask myself, okay, is this a loss that I would have taken again in retrospect, as far as would I've still taken this trade regardless of it being a loss? Or is there something that I was able to find from investigating that maybe I overlooked, right? Maybe there's something that you overlooked. Maybe you're moving too fast. Maybe you were tired at the time that you marked it up. Maybe there's just a few different things that you're like, you know what, in retrospect, if I were to see this setup again, I would actually pass it up. Now, one thing I'm going to warn you guys is this setup I'm going to talk about with Euro GBP. In retrospect, I actually would take the same setup again, just because one thing that you're going to realize is taking a loss doesn't actually mean that you did something wrong. I'm going to repeat that one more time. Taking a loss doesn't actually mean that you did something wrong. What is going to happen is, hopefully you guys have heard of somebody named Mark Douglas, right? Mark Douglas is somebody you definitely want to look up on YouTube. Mark Douglas talks about there's going to be something called, I think it's called normal losses. I think that's like the actual term. A normal loss is pretty much what it sounds like. You're going to have a loss that's relatively normal, meaning what? These losses are going to be something that are going to just naturally happen. So if you have a 100 trade win streak, you're naturally going to have a few losses sprinkled in there, right? It doesn't mean they're bad losses. It doesn't mean they're losses that you could actually avoid. It really just means that those are going to be losses that, as I said, are natural losses, which means what? That these, exactly like how Kyle said, the law of probabilities, right? So the main thing that you guys want to be able to focus on is pretty much how my boy Kyle is saying in the chat. You can't win them all, and you need to be able to decipher, okay, even though I took a loss, this is still a good setup. It's just the law of probability, right? Or is it a loss that you're like, man, I shouldn't have even taken that, right? My stop loss was too big, bad entry, wrong time of day, right? Different things of the nature, okay? So what I want to be able to talk about Euro GBP is I'm going to break down Euro GBP from where it was at the time, and I was actually looking to take the setup, okay? So on Euro GBP, the main thing that I was focusing on is if we actually scroll back and look at the chart, overall, this chart was going to be an uptrend, okay? Now, that's on a 1 hour. If we go to the daily, okay, if we go to the daily chart, we can see that this chart has actually been trending down long term, okay? This chart has actually been trending down long term. One thing we can actually see, okay, is this market actually did something called a liquidity sweep, right? We basically had relatively equal highs. This high actually took out this one, but the market came back, peaked above it. We know in our institutional smart money thing what that means. A lot of times whenever the market grabs that liquidity, it will eventually reverse in the opposite direction, which is what you see the market actually ended up doing. So we do know overall long term, this is a bearish market, okay? Now that's on the daily. Now, if we actually switch it up and go to the 4-hour, we can see in the short term, the 4-hour is actually going to be, slightly uptrending, okay? Why do I say that? Now, one thing I can notice is the market actually ended up creating a floor here, okay? The market actually ended up creating a floor here. And then after it created that floor, you guys can see that the market started doing what? Trending up. And what was it doing? Breaking structure on its way up, okay? Structure break. After a structure break, what do you look for? Some sort of retracement and then continuation, okay? Which also broke another level of structure. Now, the thing that I want you guys to be able to focus on is why is it that I was looking for a sell, okay, in the first place? So I've already explained, as you guys can see, even on the lower time frame, this market's been trending down. This really could just be what? A deeper level of retracement to continue selling. So personally, what I saw was a couple things that stuck out to me, right? One of the main things that stuck out to me is going to be this wick. Now, one thing I want you guys to really start focusing on, because this is actually going to be something that we'll be talking about a lot in the future, is going to be wicks, right? Some people call them manipulation wicks, or in general, whatever you want to refer to it as. Me personally, what I started noticing is these wicks are going to be best identified on the 1 and 4-hour time frame. Once again, these are going to be best identified on the 1 and 4-hour time frame. Okay, so on the 4-hour time frame, you can clearly see that this wick is pretty significant, right? You have a wick like this, and then you have a wick like this. There's a drastic difference, right? Look how big this wick is compared to all the other wicks that you see on these candles. This is pretty much sticking out. Now, if I drop down the time frame and go to the 1 hour, you can see it's a lot more pronounced, okay? Now, the thing that I want to be able to talk about is I actually learned this from one of my mentors. Shout out to my boy Starboy, aka Kyle's older brother, older twin, right? So one thing I learned from him is he used to always talk about manipulation wicks. Now, the thing with the manipulation wick that you would like to be able to do is you want to be able to lower, let me reword that. You want to be able to drop down time frames until you can actually locate where there's more body than wick. Now, what do I actually mean by that, okay? So what we're actually going to do is we are going to point this out so we can see, okay? And I'm actually going to show you guys how you're actually going to be able to take advantage of exactly what I'm speaking on. So whenever you have a manipulation wick, some people do just trade off the wick. I like to be able to find the body. What do I mean by that? So we're on the 1 hour time frame. All I'm simply going to do is I'm going to drop down time frames until I find more body than wick. Notice how this is a part of this green bullish candle. The majority of this 1 hour bullish candle is basically wick. This is the body. This is the wick. The wick is obviously more than the body. So what we want to do is we want to find a time frame where there's more body than wick. So we're just going to simply start working our way down. Now, obviously, one thing I want you guys to be aware of is you guys see all the different time frames that I have. I personally understand that most people are not going to have all these extra time frames, and that's okay. So for you, if you just typically have, the 1 hour, the 45, 30 minute, 15 minute, 5 minute, those kind of time frames, it's going to be the same concept. Now, not having as many time frames as I have, you might not always be able to find a more body than wick, because not every time frame is going to have a body. There's going to be some instances to where it's just all wick no matter how deep you go into the time frame, okay? So notice instantly from the 1 hour time frame to the 55 minute time frame how much extra body on this candle we have. Now, the reason why I left this yellow box is because the yellow box is going to signify, okay, this is where the body of the candle stops. This is where the wick begins. So if I go to the 55-minute, notice now we now actually have more body to this candle where the wick previously was, okay? Now, if you guys see what I see, let me get you guys to drop a 1 in the chat. I want to make sure that everybody's still on the same page. Now we're getting some participation. It is getting a little bit later. I know most of y'all are probably on the East Coast, so maybe y'all dozing off over there. So if y'all see what I see, let me get y'all to drop a 1 in the chat. What I mean is, do you see that from the 1 hour time frame to the 55-minute time frame, the difference in the wick to body ratio of the candle? Okay. Just want to make sure we're all on the same page, right? Now, the thing that I'm going to start showing you guys is we're not done. We're actually going to keep scrolling back. Now, what I like to do is, one of my favorite things to do is I like to be able to identify the biggest body candle on the highest time frame. Now, what I mean by that is, now that we're on the 55-minute time frame, I'm actually going to take this rectangle box and I'm now going to box out this engulfing / institutional candle, whatever you might refer to it as, okay? Now, as I continue scrolling down time frames, now what I'm basically looking for is I'm looking to identify, are there bigger candles on the lower time frames? Because we've already pretty much gotten the objective, right? We want to find more candle than body. You could technically stop here, but I'm going to keep going. So that's the 55-minute. Now we're at the 50-minute, okay? Now what I want you guys to notice as we start dropping time frames, pay attention to the rectangle box, okay? Notice how if I were to move the rectangle box up, you can see that this candle's relatively the same size, but it's slightly smaller. Why do I say that? This rectangle box from the previous time frame still has a little bit of space right here because it's not hugging the body of the candle. Now, if I were to click this back, right? If I were to click this back, all right, cool. Come on. All right, cool. So 50-minute time frame. All right, we're going to keep it pushing. 45. Now, only because I know that 45 was a time frame I ended up going with, I'll pretty much just stop there. Now, remember, this box is representing the body of the 55-minute candle from the opening to the close. So if I go to the 45, what I can now do is I'm now going to move this up. And what you guys see is it's bigger than the 55-minute candle because look, there's still a part of this candle that is now outside of the box. So now what I'm going to do is I'm going to drag it. And this right here, potentially, before we go any further, is what we might be looking at as our supply zone, aka our sell zone, resistance zone, whatever you want to call it. So what I'm actually going to do is I'm actually going to label this supply zone. Okay. Supply is where you sell from. Demand is where you buy from, right? So do not think just because I saw a manipulation wick and I found a big institutional or big engulfing candle, it doesn't mean that I'm just going to sell this just because of that information alone. No, this is kind of just like where I'm starting off at, right? That wick is what piques my interest. Now that I found a nice healthy candle, I'm not just going to automatically look to take the trade. Now I'm going to look to see if I can find evidence or correlations or reasons that are going to now make me want to take the trade. This alone is something that's piquing my interest, but it doesn't mean I'm just going to now take the trade. I need more information. So now what we're going to do is we're now going to start breaking down some of the other reasons why I took this trade. And like I said, even as I'm breaking this down to you guys and I'm fully aware that I actually ended up losing this trade, in retrospect, from what I'm going to show you guys, I still would have taken this setup because I've taken setups similar to this that have gone in my favor. Now, what would be the next step that I'll be paying attention to? I want to be able to get what's called a break of structure. Now, if you guys don't know what a break of structure is, that's really one of the main things you want to be able to focus on. So let me actually show you guys an example, right? Let's say you have a bullish market, right? Market is going up. retracement, went up again, another retracement, went up again, right? Now, the thing that you guys want to be able to focus on is where are the true breaks of structure, okay? We have a break of structure here. We also have a break of structure here. Now, how are you able to properly identify a break of structure, you might ask, okay? The way that you're going to identify that is whenever you have an extended move followed by a retracement, that break of structure is going to be verified by, right, that last high that was set before the market started retracing, okay? That last high that was set before the market started retracing. If this high does not get broken, it might not be in your favor that this market is going to continue trending up, right? Say, for instance, this market ended up doing something like this, right? It broke this area, retraced, fell a little short, and as it's pulling back, maybe you're like, okay, maybe within this extension, I might be looking for a buy to continue going higher. But the dangerous thing is, if this level did not get broken, you should not be looking to take the continuation, because what could honestly happen is if the market does not actually come back and break this high, you easily could have the market just now start pushing to the downside, okay? So you always want to make sure that that last high or that last low actually gets broken, then look for the retracement. All right, so where I'm going with that is my personal break of structure would be right here, okay? This is where I identified a break of structure. Now, think about it. Let me show you the example that I just showed you guys. What did we get, right? We had the market, give me 1 second. So we had the market create this high, right? The market gave an impulse move to the downside, broke this level of structure, right? Gave a retracement, continued with another impulse move. Once again, right? Broke some level of structure over here to the left. Now, this is where it kind of gets a little tricky, because you kind of have to know like what you're looking for. Some people may consider this a break of structure right here, and some people may consider this a break of structure. I'm here to tell you, technically, both of these are breaks of structure. Now, you may consider a liquidity sweep versus a break of structure. That's like a whole different topic, right? Where I'm going with this is it broke structure to the upside, but then it immediately did what? Proceeded to break structure to the downside. Now, from my experience, a lot of times whenever you get the market doing something like this to where it'll break a high, then immediately break a low, or break a low, then immediately break a high, the last break of structure is the direction that I would like to go in favor of. So the high is what was broken first, but what ended up getting broken last was the low. So whatever is your most recent break of structure, in my personal opinion, is a direction that you might want to stick to, just to avoid confusion. Now, even though the stop loss got hit, right? Like I said, these are just based off of me taking previous setups of similar visuals, okay? So in this example, I perceive this to be a liquidity sweep, basically meaning the market came, grabbed this high. Okay, you had, a little liquidity that had formed with these two highs. So this high had not been taken, neither had this one. The market came, peaked above both, grabbed liquidity from what I see it as, ended up immediately dropping in the opposite direction, and then gave us this break of structure, okay? So we're going to label that a BOS. This is going to be our break of structure, all right? Now, from this point, I'm going to be extremely honest with you, right? This is basically all I needed, right? This is all the information that I needed to feel confident to take the setup. One other thing I want to show you guys that I'm going to start putting more focus into showing you guys and teaching you guys, because it was something I actually used to overlook. You want to be able to make sure, most importantly, okay, in my personal opinion, anytime you take a trade, you want to make sure you either have a balanced market or a LQ sweep. I'm going to break this down in detail because this is something that I to do with the trades that I was. So a balanced market or a LQ sweep, which stands for liquidity sweep. What do I mean by that, right? Having a break of structure alone is not going to just be the thing that you want to run with, right? Some people, what happened? Let me know if y'all can still hear me. Drop a 2 in the chat if y'all can still hear me. I have a message on my YouTube stream saying I have no data and this stream will end shortly unless you restart it in your streaming. I don't know what's going on. Let me get y'all to drop a 2 in the chat if y'all can still hear me. If y'all are still on the stream and y'all can hear me, let me get y'all to drop a 2 in the chat. If y'all can still hear me in the chat, let me get y'all to drop a 2 in the chat. Like I said, I am new to this YouTube streaming. All right, y'all can still hear me? Cool. Definitely gonna need y'all's help throughout the process to make sure that we are good. All right, so I'm gonna go ahead and keep it pushing. I keep breaking up. Yeah, it's saying I don't have like the best. I don't know if my computer is just too slow or what. But yeah, it's saying I'm getting poor signal right now. Breaking up on and off. Dang. Yeah, I really don't know what to do. It's showing that it's good on my end. I don't know why the quality is so bad. I'm gonna just keep rocking out, and then like I said, I'll just as we further and do more of these, I'll try to see what I can do. I don't know why it's doing this though. You can't see anything. Wow. Huh. Can't see nothing. All right, cool. We should be back. All right, let me know, Michelle. Are we good now? It says connection is good again. Michelle, let me know. Are we good? If you're still on the call, if anybody's still on the call, let me know. Are we good? It says the stream is good again. We're good now. All right, cool. Appreciate you, Michelle. You're a lifesaver. All right, Beth. So let's go ahead and get back into it before it messes up again. All right, cool. So as I was saying before, we're going to be talking about a balanced market and an LQ sweep. So what I mean by a balanced market is I'm going to show you a perfect example. Now, this right here is going to be an example of a balanced market. I want y'all to pay attention close. A balanced market basically means you want to make sure that all imbalances and order blocks have been successfully mitigated and or filled. If this is terminology that you're not 100% privy to or you don't understand, unfortunately, I'm not going to be explaining everything in specific, meticulous detail. Hopefully, some of y'all already kind of understand some of these concepts coming into the call. Not 100% beginner friendly, I'm not going to lie to you, but over time, as y'all rock with me more and more, a lot of these terms will start making more sense. So, one thing I will do is I'm going to break this down for y'all. So, peep this real quick. What do I mean by balanced market? Let me explain. Now, a balanced market is going to work like this. Let me get my replay tool again and come over here. All right. Now, I hope y'all know what like an imbalance is and an institutional candle and things like that. If not, I'll give y'all a little quick tip. So when I say institutional candle, it literally is just an engulfing candle, which y'all should know what that looks like. Now, imbalance. Everybody might not be privy to an imbalance. This is an imbalance right here. All right. These are actually things I could be making YouTube videos about, like what is an imbalance and stuff like that. So right here, this gap that I've now drawn, this rectangle box in, this is an imbalance. Now, you might ask, what is an imbalance? An imbalance is basically whenever the market has an overly aggressive push in either direction, and it leaves what's called uneven pricing or unbalanced pricing, right? Inefficient pricing. That means the market was moving so aggressively in a certain direction, it left a gap, right? Now, if you pay attention and look at all these candles, there's usually no gaps that are left. At one point in time, here was a gap. The market did what? Ended up coming back, filling it in. So the concept of it is whenever you see a gap, an imbalance, an inefficiency, whatever you may refer to it as, the rule of thumb is it should get filled. When that happens is kind of the toss-up and what you have to figure out. So if you see an imbalance, it should eventually get filled. How long will it take to get filled? That is the actual question in itself, okay? Now, if we're actually looking at this imbalance that you see, the concept that I would like to break down to you guys is an imbalance getting filled is what I mean by balanced market, okay? Now, the reason why I bring that up is because I'm going to show you guys an example of an unbalanced market and how it could have affected you in a negative way if you didn't wait for the market to balance out before you decided to take a trade, okay? I'm going to wait until I finish with this example, but I will show you guys that. So what I actually ended up saying was, if you guys look right here, this is basically where the market completely filled this imbalance. On top of that, this is an engulfing or institutional candle that it hit. So this is what I would consider a balanced market, meaning the imbalance or institutional candle both got filled before the market ended up going in its desired direction. Now, say, for instance, if this area did not get filled, I might still be a little hesitant about taking a setup, because if this doesn't get filled, my setup might not be valid until, okay? So if I end up erasing this and now going back to showing you guys exactly what I'm referring to, this is what I was looking at the time, okay? So now let's break it all down. So whenever the market ended up balancing out, which happened up here, after that, it ended up creating this level where the market eventually came back and broke that level of structure. Now, to me, all of these were reasons that I was like, okay, this seems like a good trade to take. So we now have the time frame for the candle that I like, which is the 45-minute time frame. We got a balanced market. We got a liquidity sweep. We got a break of structure. These are pretty much going to be all the confirmations that I like to be able to pay attention to. I like to be able to utilize. You may have more. You may have less. I'm not really here to tell you whether or not you're right or whether or not you're wrong, because everybody in trading has stuff that works for them. All right. Now, long story short, it's no reason to kind of go into, specific entry or stop loss, because this is an L, right? I'm going to just let it play out. And obviously what I wanted to see happen was the market reject off of this zone and then go in my favor. But as you guys see, best case scenario, the market ended up hitting this level, gave a very steep drop, and then proceeded to go higher, which means what? This trade was invalidated, and it resulted in what? A loss. Now, think about what I just said. Whenever you take a loss, the most important thing, in my opinion, is go back, review the loss, ask yourself, okay, Is there anything I could have done differently? If there is, what is it and why? If there isn't, then guess what? This is what's going to be called a normal loss, which is going to happen. You're like, okay, I mean, there's nothing I actually could have done differently. This is a good trade. I would have taken it again in retrospect. I just got to take that L and hold it. And that's just why you don't over leverage, because it's going to be setups. Think about it. Everybody has had that setup to where in your head, you fit, oh man, this is finna, man, I'm about to over leverage on this one. This one finna go. And it goes and hits stop loss and you're confused because you might be like, okay, I've taken a setup similar to this before and I won. It doesn't guarantee every setup in the future is going to actually happen that way, okay? So that's why you never want to over leverage, and you always got to be aware. I didn't lose because I did something wrong. I'm just naturally going to have losses, and this is just a part of trading, okay? Now, that was a setup that I called out, and we lost, okay? Now, what I'm going to do is I'm now going to show you guys two more setups, one of which I called out that actually went in our favor, then hit break even, and I'm going to show you guys one I personally took myself. And then we'll be done because we already been on here for about an hour. Like I said, it's my first call back. I literally have not done a Zoom call. I haven't dropped a YouTube video in like 2 to 3 months. So I want to be able to make sure I got on here, showed y'all some love. Shout out to Michelle. Michelle been going hard. Shout out to Kyle. Shout out to Prescott and whoever else might still be on the call. Really appreciate y'all from showing love on my first call back, and I'll make sure I stay consistent. We'll be dropping another call on Sunday because what I'm going to start doing, just so you guys know my schedule, Tuesday, Wednesday, Thursday, 1 a.m. Central, 2 a.m. Eastern. I'm going to start back doing my live London trading sessions. Fridays, like Friday night, I'm probably just going to stick to like 11 p.m., 12 a.m., midnight type thing. I'm going to start doing my weekly recaps. Actually, I'm not going to wait this late. I'll probably start doing these recaps at like right when the market closes. So probably like 4 p.m. Central, 5 p.m. Eastern, something like that. So Tuesday, Wednesday, Thursday, live trading. Friday is going to be a recap on the setups that we took during the week. And then Sunday is going to basically be me going over possible opportunities and kind of seeing what the market looks like before the market opens to start off the new week. So we're definitely going to be having about 5 sessions a week. Going to be working. I definitely hope you guys are going to be tuning in. Now, the next setup that I called out was actually going to be USD CAD. Okay. Now, USD CAD definitely could have been a winner. Definitely could have been profitable, depending on how you manage the trade. Me personally, I didn't make any money. I didn't lose any money. It hit break even. But I know some people manually exit early and all that other stuff. That's why I always tell people, you need to learn how to manage your own trade. All I can do is give you updates on how I'm managing my trade. But it may be opportunities that you could have made money that I didn't, but you're following how I'm managing my trade, and maybe that doesn't work for you. So I'm not saying don't do what I say when I send the update on the trade ideas, but also be aware it is your account. You are your own person, and you have the ability to do whatever you want to do. So USD Chef. Let's go over USD Chef. And after USD Chef, like I said, I'm going to actually show you the setup that I was able to actually make money on. USD CAD, I'm sorry. So USD CAD. All right. Let's go over USD CAD. So this is going to be USD CAD, okay? Now, the thing on USD CAD that I personally was focusing on was USD CAD is actually in an aggressive uptrend. So if we actually go to the daily time frame, you can see that USD CAD has actually been trending up as of recent, right? If we go to the 4-hour, we can see that USD CAD, has been trending up. Now, one thing I was actually looking at, if we look at a 4-hour, we can see one or two things might possibly happen, okay? Because now what we have is something that one of my mentors calls a trading range. This high and this low right here. This is basically like a range that the market is stuck in. One of two things is bound to happen. The market is either going to break this high and continue going higher, or the market might possibly break this low and start actually selling off. Now, one thing I'm looking at is these lows right here that are relatively equal lows have been broken. This in one way can be considered a form of break of structure, which means what? Once the market broke this area, this now could possibly be a retracement to now start selling off. Okay. So that was one of the things I was paying attention to. I was like, okay, we did actually get some structure break in these levels. The market has already given a deep retracement into this move. So if it is going to actually start selling off, let me actually pull out the Fibonacci, right? And once I pull out the Fib, we can actually see the market gave us a pretty deep level of retracement all the way to the 78.6, which means what? If you get a retracement and a deep level of the Fib, it just gives you the confidence to be like, okay, if I am going to take this trade, it makes sense to take it from this area because we've already gotten a deep enough retracement. Okay. What you don't want to do is you don't want to buy or sell if you haven't really got a deep retracement, because even if the setup looks good, the market might still want to get a little more discounted before it ends up going to your desired favor. Now, the thing that I first off looked at was, if we look at this 4-hour time frame, we have a 4-hour bearish engulfing candle. Okay. If I go to the 1 hour, on a smaller time frame, we're now kind of starting to see similar things happening. So once again, you guys want to be able to start identifying breaks of structure. Here's a break of structure. Keep in mind, this is on a lower time frame. You can't see all these breaks of structure on every time frame. Sometimes you got to drop down a little lower. This can also be considered a break of structure. So you got two pretty significant breaks of structure, right? Now, one other thing that we have, all right, I'm going to pull out the, y'all can see it on here. So one other thing that we have is going to be divergence. So this right here is going to be called the TDI. The TDI works similar to the RSI, but basically what you're focusing on is this green line right here. So notice this green line is trending down, right? The green line is trending down. At the same time, why is it that the chart is continuing to trend up, right? Think about it. From this moment, if I were to take a vertical line and line it up right here, we can actually see that in the same instance that the market is moving up on the chart, the market is actually sloping down momentum-wise on the TDI. What does that mean? That means that we have divergence. Divergence is fairly straightforward. Whenever the chart is going in one direction and you're using an indicator that is going in the opposite direction, that is divergence. If both of these were going in the same direction, that's not divergence. It is only when the chart is going up, meaning that the indicator is going in the opposite direction. So the opposite of up is down, the opposite of down is up. Now, what does divergence actually mean, and how are you able to take advantage of it to make money? Divergence in a nutshell basically means momentum is getting weak. Okay. So if I'm looking at a market trending up, but I notice that there's divergence showing that the market is weakening, that means eventually this market that is trending up is going to hit a ceiling, and it may now start reversing and going down. That is what divergence is there to help you identify, because the mistake a lot of people make is they like to sell from the top and buy from the bottom, which in general is nice if you can take advantage of it properly, but it's also dangerous. How many times have you kept trying to sell a market that keeps going up and it just keeps hitting your stop loss, but you're convincing yourself, oh no, it's going to drop now. Nah, it's going to drop. Nah, it's going to reverse now, but it just keeps trending up. Using divergence is a tool that you can have in your repertoire. I almost hurt myself. You can have in your repertoire to be able to have the confidence to know, okay, it actually makes sense that the market is probably going to start reversing now. So how I use divergence is combination of divergence with the break of structure. What you want to do is you want to wait to see the divergence. Once you see the divergence, wait until you get some form of break of structure. The divergence partnered with the break of structure is the gem. Okay, so now that I've shown you guys two of the confirmations, we're about to do the same exact thing that we did last time. Now, every situation is not going to have a manipulation wick. These are just situations that actually happen to have them. In the future, a lot of the trades that we take are not actually going to have manipulation wicks. But for the purpose of these examples, I'm basically going to show you this is similar to what I just showed you guys on Euro GBP. So what I want you guys to notice is my definition of a manipulation wick is whenever there's more wick than body. So what I want you to notice on this 1 hour candle is notice that this is the body of the candle. This is the wick. It is very obvious and plain as day to see. There is more wick than there is body on the candle. Now, if you guys remember what I just showed you, what we are now going to do is we're going to now start working our way down on the time frames to see, can we find a time frame that has more candle than body? So we're going to go to the 55. Instantly, from the 1 hour to the 55, you can instantly see there's more candle than body. Now, for me, I like to be able to look for big juicy candles. And you'll know a big juicy candle when you see it, trust me. Bam! This right here is going to be a big juicy candle. Now, if I go back to the 1 hour, then I go to that 35 minute, you guys can see the drastic difference and see exactly what I mean by, is there more candle than body? No, is there more body than wick? Sorry, is there more body than wick? This is a prime example. Now, the next step is going to be, remember what I told you guys. You want to be able to focus on having a balanced market and or a liquidity sweep. If you can get both, even better. But one or the other is perfectly fine. Now, a liquidity sweep, we actually have right here. Now, what exactly is a liquidity sweep, you guys might be asking? Basically, whenever you have highs or lows that are formed within the same relative area. So notice this right here, okay? Notice how all these wicks that I have this yellow rectangle box on, let me identify them for you. All right. Notice how here, 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 right? So what I want you guys to really focus on is notice how in this zone, there are multiple wicks that are basically in the same area. This is what we refer to as built up liquidity. These wicks represent stop losses from people that were in sales. And a lot of times what the market does that not everybody is taught is that the market is going to actually come back and take that money, right? What does that look like? What does that mean? It means that the market purposely builds up stop losses in a specific area, leaving it there to come back and collect later. And it's going to actually result in a lot of different people's stop losses being hit. So this candle that basically ran above this zone is the liquidity sweep. Now, the dope thing that you guys are able to do if you know this information is that last push up or down that grabs that liquidity. In a lot of situations, you can actually focus on that area to see if the market comes back, gives a retracement into that zone, and then you can look for that continuation in the given direction. So basically all I was looking for is a retracement back into this candle to then take the continuation down. So let's see how that actually ended up playing out. Now, the thing that you guys can see is, and I'm going to show you, we actually got a great entry on this. Hate when you get all this stuff on here. Let's get all this up out of there. All right, bet. So let me actually show you guys the entry that we got off this trade. Entry was 29670. Let's mark that up. 29670. Now, what I want you guys to focus on is look at that entry, right? Perfect entry. I want to say the market, I think it fell like 80 pips. Yep, market basically fell about 80 pips, right? Now, me personally, I went break even. My first take profit was at this low. So I didn't close out the trade. I didn't take any partials. I didn't do anything. I went break even. Market came back, took me out. Okay? And at that point, guess what? I didn't make anything, but more importantly, I didn't lose anything either. And those were basically the two setups that we collectively took as a unit this week. Now, like I said, there was a setup that I actually took to where I made money, but what I want to be able to focus on these calls is I really only want to talk about trades that I call out so that we all took the trade together. If we win together. If we lose together. A trade that I took by myself, I don't actually care to talk about it because nobody besides me got to benefit from it. So with that being said, guys, I don't know if anybody's still on the call, but these are the things I really want to be able to talk to you guys about today. And if anybody's still on the call, you were actually able to take any advantage of any information that I gave you guys, take advantage of anything that we spoke about tonight. Let me get you guys to go ahead and drop a 1 in the chat. If anybody is still on the call and you were able to take advantage of anything that I just spoke on right now, let me get you to go ahead and drop a 1 in the chat. Because I appreciate everybody who took out the time tonight to be able to hop on this call. As I said before, I have been absent from YouTube for about 2 to 3 months. I do apologize. But one thing that will not happen is I will not go back into that. I'll make sure that I stay consistent. I'll make sure that we don't have any more lapses. And most importantly, I'm going to make sure that 2022 is going to be our year. So with that being said, guys, I appreciate everybody for hopping on this call. I will see you guys again on Sunday. I'll announce the time in my chat. And yeah, so peace out, guys. I hope y'all have a blessed night. And I'll see y'all when I see y'all.